Well, you seem to have so much fun. Do you still remember what you learned yesterday?
Forex is, the exchange of one currency for another?
Well done, Will. Today I'll continue to teach you how currencies are traded.
Can I start with 20 cents and become a billionaire?
What a dumb question. Do stop daydreaming.
So sorry, Dr. Lambeau. Let's get back to class.
The foreign exchange trading market, also known as the Forex or FX market, is the world's largest financial trading market. According to statistics, the daily volume of all stocks traded at the New York Stock Exchange is about $74 billion. The number is significantly smaller than the total volume of the Forex market, which transacts about $6.6 trillion a day.
So how does Forex trading work?
The answer is very easy. Forex trading is trading your money. Let's start with the basic concept. When you buy another country's currency, you are basically taking a bet on it. You simply believe that its value will go up so that you can make a profit. Therefore, the constant change of a currency pair reflects what market participants think about the respective economy. Please note that not all currencies can be freely traded in the Forex market. It depends on whether the currency can be freely converted, or whether it has enough liquidity on the market. Also, only currencies that can flow in and out of its country or region can be traded in the Forex market. This includes currencies like the euro, dollar, pound, and Swiss franc. Let's conclude today's session. We have learned that Forex trading is the process of buying one currency while selling another. However, not all currencies can be traded in the Forex market. Those that can be traded are easily convertible currencies that can flow back to their countries or regions. Aha! Well, are you ready for the quiz again? I will test you to see if you have mastered today's session. Here is the question. So here it is for today. In the next video, we'll learn about what trading a currency pair really is.